So today we're going to be talking about FTEC, which is the FinTech and Blockchain ETF by ETF Securities, which is newly released. Now there's also a similar ETF just released by BetaShares called ASX Crypt, which we'll talk about in a different video, so stick around for that. Do subscribe for that video, which is coming up next after this one. If you guys are new here, my name is Faizy. This channel is about finance and investing. Before we begin, as usual, please do some research of your own. This video is not financial advice. This is not a buy or sell recommendation. Let's jump into it. So FTEC basically gives investors exposure to the leading financial technology and blockchain companies. Now, while this is a blockchain ETF, it is not a purely blockchain ETF. There's some fintech companies on here as well. So the split is going to be blockchain companies and fintech. It is not purely a blockchain ETF. Now, I was actually on a webinar by ETF Securities talking about this exact ETF, and it was a pretty good webinar. I learned quite a few things, and a person asked a question talking about why there is no physical Bitcoin and Ethereum held by the fund. Why is it just publicly listed companies? And the answer they basically gave was that at the moment, ASIC hasn't actually approved it just yet. So yeah, there you go. The fund doesn't actually directly invest into Bitcoin or Ethereum. It just invests into those companies. Now, fintech right now is more important than ever. And personally, I love this space because my background is in finance and investing, and just working in the actual industry, I can really see how efficient things can really become if we just add, blockchain into it and fintech into it as well, and just add a bit of tech into it, because like things that literally take, weeks and months to do can be sped up very quickly. It can be done in a matter of days, even just instantly as well. So the actual tech is very interesting. Now, in case you didn't know what fintech actually means, fintech is just technology that makes financial services easier, efficient, and cheaper. And that's the most kind of simplistic explanation that you can kind of get as to what fintech really means. Now, some examples of fintech companies are companies like Afterpay that operate in the buy now, pay later space. You've also got companies that are operating in the money transfer space, mobile banking, share trading platforms as well, obviously online platforms, digital wallets, robo-advice, and of course blockchain and DeFi, which stands for decentralized finance. Now, smartphones are a very big factor when it comes to actually accessing those fintech services, since pretty much every single person in a developed country pretty much has a smartphone, and we are now slowly moving towards a cashless society, especially in the developed world, because a lot of people are just choosing to use those debit cards and online payment systems instead of actually using cash. Now, of course, this presents a range of other issues which we're not going to go into, but digital money is looking to slowly replace cash over time. It's just more secure and it's much more efficient. There's less fraud there. But of course, the actual privacy is being lessened when we use online methods. Now, looking at the fintech sector overall, revenue is definitely projected to grow in the future. And that is one thing that ETF Securities looks for in their ETFs, to see if the actual government support is there. And that kind of confirms a long-term trend towards that sub-theme and that thematic ETF. So some examples of this that we can actually have a look at is before China trialed their central bank digital currency token, pretty much the digital renminbi, and that kind of happened in the past. And then looking at another example, we also had Singapore, which they also issued 2 digital banking licenses as well. So around the world, this sort of shift is happening. More and more governments are looking towards using these more digital methods of actually having money. Now, if we actually dive deeper into blockchain solutions specifically, as you guys can see, the actual spending on blockchain solutions worldwide from 2017 to 2024 is projected to grow quite a bit. It's pretty much sitting at roughly around, say, 7 billion at the moment, but it's really expected to skyrocket in the next kind of 3 years or so, sitting at $19 billion globally, which is absolutely insane. And of course, looking at kind of the 2021 spending on blockchain solutions on the US was $2.6 billion just in that country, and the European Union or Europe was about 1.6 billion. So things are kind of projected to ramp up. Now, speaking more about blockchain, of course, this ETF does have a focus on decentralized finance, or DeFi. Now, let's actually talk about DeFi for a little bit. Now, DeFi is basically where there is no intermediaries, there's no middleman. So basically, they just cut out all the rent-seeking middleman when it comes to, borrowing and lending money. So pretty much in today's day and age, you have the banks or the credit unions that pretty much, those middle people that pretty much stand in the way when it comes to, borrowing and lending money. So if you pretty much get rid of the middle institution, you have decentralized finance, and that is a very kind of simplistic explanation for it. You do have stuff like smart contracts in there, and there's much more transparency as well. And when it comes to blockchain, it is pretty much a digital ledger of all the transactions, and it is very difficult to actually hack. If you were to actually hack it, you would need to hack all the transactions to actually change it, because all the people are trying to, verify those transactions to make sure that all transactions are correct. And to actually hack one thing, you would need to actually change the whole thing, which is very, very difficult to actually do. So at the moment, this remains quite a safe technology. Now, the thing with blockchain is that we talk about it more so in a finance perspective, but this technology can really be used in other industries as well. But at the moment, finance is a very big adopter of this industry, but it can really be used in other industries as well. And those examples we won't actually go into in this video. Now, looking at FTech in more detail, as you guys can see, it currently invests in about 75 companies in developed markets in a range of sub-themes. Now, if you guys didn't know, FinTech is pretty much a very broad umbrella term, and FinTech is actually made up of many sub-industries like these. As you guys can see, you've got stuff like digital payments, trading, data providers, point of sale, peer-to-peer lending and growth funding, personal finance, etc., etc., etc. And then you also have decentralized finance, which is of course blockchain, which is obviously the most interesting part of this ETF. So as you can really see, blockchain is only really a sub-theme of the sector. If companies are doing blockchain in this ETF, up to 20 companies can be included of that type. But if companies are part of other sub-themes, then only 10 companies can be included. So this ETF can have a bigger focus on blockchain, if that makes sense. If companies are doing blockchain, then those companies will be given a bigger weighting. Now, looking at some crypto trends, of course, crypto is slowly starting to be more and more mainstream. Pretty much everybody is talking about it these days, especially with stuff like NFTs coming into it as well. And of course, the developing countries, those countries are going to be using this technology, and they're going to pretty much skip the old tech that other developed countries had, so it still has a very long way to go in the future. This ETF also includes companies like Hive Blockchain. This company pretty much uses 100% green energy to actually mine Bitcoin and Ethereum. And analysts pretty much believe that these types of mining companies have about 70% correlation to the price of Bitcoin and Ethereum. So while this fund doesn't directly invest into those cryptocurrencies, you do get that exposure with these mining companies where that price is very correlated towards the price of Bitcoin, if that makes sense. Jumping into some benefits for this ETF, number one is the hedge against disruption to the big banks, which feature predominantly in Australians' superannuation funds. And this is very true. By default, superannuation funds pretty much invest in a bit of everything. You have a bit of fixed income, property, international shares, domestic shares, and of course, with domestic shares, about 30% of the ASX index is made up of the big banks or the financial sector in general. So if you do invest in an ETF like this, you are getting a bit of hedge against those big banks, and you're getting a bit of a different exposure to these new types of companies. And the thing with these big four banks is that they're so slow to actually adapt to new technologies. We saw CBA and NAB roll out those interest-free credit cards, which didn't really do well. They were trying to compete with, Afterpay and things like that. That didn't really work out. So this ETF is going to be a bit of a hedge against those types of holding. And benefit number two, we have access to fast-growing companies in an exciting new sector while avoiding the risks that come with picking individual stocks. Now, this is the thing with this sort of sector. It can be very hard to actually pick those winning stocks because this space, is very volatile. It changes very quickly. So to access this space with an ETF may not be a bad idea, not financial advice. And number three, invest in the world's leading adopters of blockchain technology. Now, of course, blockchain tech is pretty new for investors, so you can pretty much get easy exposure to those companies just with this ETF. Now, looking at the returns for this ETF, it was listed at about $10 on the 14th of October, and that's usually the price that ETF securities usually starts it off at $10, and then pretty much the price moves based on the index. So the price doesn't really matter too much. The $10 is pretty much a very arbitrary price that the ETF manager can choose. And since then, as we can see, it's only really been about a month, and the return has been about 7.3% so far. So it's been doing good, but of course, we don't have a lot of data these days on this exact ETF because obviously it just listed. So as we do on this channel with every single ETF that listed that we don't have a lot of price data on, we just jump into the index itself and see what it's tracking. So as you guys can see, the ETF tracks this index, which started at June 2016, and since then it's only really been about, say, 5.5 years, and the return has been almost about 3x, which is pretty insane, and obviously it is beating the S&P 500 index as well. But just keep in mind that this is only 5 years worth of data, and of course this is a long-term thematic, because when it comes to blockchain and crypto, we are nowhere near what the actual end result and the actual potential that these technologies have. So we are really at the beginning stages of what we are right now, so there's still a long way to go. And this ETF is a way to get long-term exposure to those benefits. Now, since this ETF is from ETF Securities, you can usually buy it brokerage-free using Perla, as you guys can see, but for some reason, I actually can't see it to be brokerage-free right now. There still seems to be a purchase fee of $9.50. Maybe it hasn't updated yet, but if you do want to know some ways you can buy ETFs completely brokerage-free, check out this video right here. This video pretty much explores 4 different methods you can use with 4 different brokers to actually buy ETFs completely brokerage free. So go check it out. It'll be very valuable, very helpful, I promise. Link in description. Now, looking at some high level information for this ETF, starting off with the management fees, it is 0.69% per year, which turns out to be around $69 per $10,000 invested. Now, this ETF is not really an ETF that's usually meant to be held as a core holding of your portfolio. It's meant to be a satellite allocation, so pretty much a little bit of allocation in your overall portfolio. So of course, the actual portfolio won't really be exposed to that many fees, and the fees are going to be quite minimal as a percentage of your overall portfolio. And this ETF is really only meant to be a tactical position towards the sector in your portfolio, if that makes sense. The overall portfolio should still be around kind of those broad market ETFs based on your risk allocation, not financial advice, of course. The dividend frequency is semi-annually, so of course this ETF is targeting growth, not income. So the income is going to be kind of semi-annually. It's not going to be a lot. The dividend yield won't be a lot, so don't really expect it to be that much. It's mostly focused towards that growth of this actual sector. And it is domiciled in Australia, which means that it's going to be very easy on tax time. You won't need to complete any additional US tax forms, which we usually do with other ETFs that are listed in America. Looking at the holdings for this ETF, as you guys can see, there's a couple of companies there for each subsector that we had a look at before. You've got pretty much every subsector covered off, as you guys can see, along with that decentralized finance, which includes Coinbase, Galaxy Digital, and Riot Blockchain as well. And this is how this ETF is pretty much designed to cover off each sub-theme. Now, this ETF also includes Afterpay and Xero, which is a proud Aussie moment for us to actually include those Aussie companies onto this global ETF. Looking at the actual ETF overlap, this table compares FTEC to other kind of ETFs out there from ETF Securities. And as you guys can see, FTEC is the second one on the right. And we can see that only 2.4% of FTEC's holdings is actually in the tech ETF from ETF Securities. So there is very minimal overlap. As you guys can see, for kind of the other ETFs that are out there, there is 0% overlap between every single one of them. So it's a very good ETF in terms of if you have other ETFs held with ETF Securities, you're going to have very minimal overlap. So if you guys want to take a screenshot of this, because it'll be very helpful, and I'll also remove my video for the time being for about 5 seconds, so you can take the screenshot. And I'm back on. The sectors of this ETF mainly rest with IT at 50%, then you have financials at 37%, and these are pretty much the main sectors. And of course, that is what you would expect from a FinTech ETF, so that's pretty much fine. And then lastly, looking at the country allocation, we can see a huge focus on the US, as usual with these types of tech and FinTech ETFs, at about 64%, with lots of European countries and a few Asian countries in there as well. Now, personally, I'm going to hold off on investing in this ETF for now, but let me know your thoughts. We do cover lots of thematic ETFs on this channel, so check these 2 videos out. This is a semi-ETF which tracks the semiconductor index, and this is the AC/DC ETF, which obviously tracks the lithium and battery market. These 2 ETFs are also from ETF Securities, so go check it out. And guys, thank you so much for watching once again. Please like and subscribe, and I'll see you in the next one. Bye now. And that's a wrap. That is a wrap, man.